All right. Hey, good morning, everybody. Welcome and thank you for joining. Okay, I'm going to jump right into it today. We got a lot to cover, and as always, if you have questions, use the chat function, and I'll try to get them answered. Or you can always text me, and we'll try to get it answered that way. Okay, in front of you is the weekly chart of corn, and I've got it scrolled out, so I know it's condensed, and I don't have it broad so it's easy to see yet. That's because I want to give you this picture of kind of where corn sits. Now this is the weekly chart, so this is always plotting the front month, okay? This has nothing to do with new crop or the back month, but this is just at a glance, the first thing that I think should jump out at everybody is that this is where we're trading this morning, which is right at 497. We have broken $5 overnight. We traded to 502 on the March contract. What should jump out at you is that we are still in the bottom half of this price trade range. Corn has not yet broken into the upper range of its band. And I think that's really significant because soybeans have. They've already traded up in to this range here from 2010 to 2014. And if we're going to look at a chart, right, let's make it simple. We want to know at this price level, because we've been here before, where did we run into some resistance, right? It's very logical. If we hit a certain price level in the past, and that price level gave us a headache because it got sold, then that's now resistance. So we're looking for that visually on the chart. Don't make it harder than it is. It should jump out at you. It's right here into this zone of $5 up to about 520, okay? There should also point out to you that there is nothing between here and 520, kind of this I call it a range, 515 to 525. There's really nothing between where we're at and here that would cause you to think that we won't go hit those levels, because we're going to go test it, right? We're going to probe, and we're going to go through some price discovery to try to decide whether or not we should break through these levels. So let's look back here and just kind of look historically about how we've managed this move to begin with. You know, you've got this range at $4 that kind of held us from 2016 forward, and we spent several weeks kind of probing it, right? We broke it, we came back down and tested it, we broke it, tested, we kept banging around on it. And then we finally decided, okay, that's going to hold, so now let's go look for the next round of resistance. Well, we immediately popped right up here into this 460 range, and it didn't take us long to get there. And I'll tell you what, we didn't even blink at 460. So we just blew right through it, and we immediately came right up to this level that is back here where we previously ran into a little bit of consolidation, right? See how we traded above it, and then we broke right back in here. And I know that's tight, but I'm going to zoom in here in just a second. The next level is this 520 level. And then above that, this is the weekly chart. And you see this gigantic gap right here that is formed from a peak of sorry, let me get this right here, 545 to 684. That is a gap on the weekly chart. And there is a possibility that if we break this 520 level, that we will trade up to the bottom side of that gap. And if we trade into it, then the odds will favor that gap ultimately gets filled. Now, I don't think we go straight to it, but I think that if we get into a little bit of a drought situation in new crop and we get into an acreage battle, then odds favor that gap getting filled if we're able to trade back into it. So kind of psychologically, I think everyone's mind needs to be changed a little bit. We've been in this mindset since 2015 that $4 is a good number for corn. I think with this price action, you've got to change your mindset and realize that $4 is cheap. Why do I say that? Well, corn's $6.50 in South America. It's close to $11 in the interior of China. We're the cheapest corn in the world by far, sitting right here. And we have weather problems. And the demand story in China is just warming up. Now, those are just fundamental reasons, right? In corn, you've got China out, you've got strong exports. They're all hot and dry, and you got drought here. But you've got this larger macro reason, which is the U.S. dollar index, and the dollar is now trading solidly below 90, and it's breaking out into new lows even today as we speak. So you've got this inflationary tilt to it that could accelerate this move to the upside. Now, I'm not saying we don't have down days and that we don't come back down and test and those kinds of things. Of course, we will do that. But unless something changes significantly, I think you got to wrap your mind around the fact that $4 isn't a great number for corn at this point. It should be your bottom side. Now, I also want to talk about pricing too far out. People are looking at DEES 21 at 440 and thinking about pricing it. They're looking at DEES 22 and thinking about pricing it. Why? I don't get it at all. There's nothing on this chart that says sell me. This is a trend. It's your friend. Let it work for you until it gives you a reason. Guys, last year we were trading in 2020. We were trading at $4. We've only gained 40 cents on new crop over last year. We haven't done anything in relation to what the fundamentals are really telling us and what the market is doing. I have no interest in selling new crop whatsoever. Old crop, I get it. We need to liquidate. That's fine. I have no problem selling good numbers into old crop. New crop, zero interest whatsoever at this point. Even if we break all the way back down to $4, unless something changes and the dollar rallies back to over a buck, I still have no interest in falling for that bait. I think that's an entry point and a buying opportunity if we get a big dip here. So I'm not bearish at all on corn. And if you look at this chart from a technical standpoint, right, support and resistance, it's breaking out. It's just starting an up move. I think we've got several more weeks before we even come close. But now let's look at the daily chart. Hold on. Oh, hold on. Before I leave here, look at your oscillators. Look, this is one more point that I think is really important. I keep hearing that we're overbought, we're overdone, we've gone too far too fast. Everyone's expecting this whack-a-mole type action that we're used to. But look at your oscillators. Your oscillators down here aren't showing any signs of divergence. They haven't even come close to the level of exuberance that we had in 19, that we had in 15, that we had in 12, even that we had all the way back into here. We look how long we stayed at these levels from 2000. This is 2010. Here's 11. Here's 12. We stayed up in these areas for years. Why do we think that we're only going to stay up in this? We haven't even reached that level yet. Why do we think that we're going to just turn around and get smacked down? That's not at all what this is telling us. So I think patience is the most important and operative word that we can have. Why is this not letting me change back here? Hold on just a second. There we go. Okay, now here's your daily chart. I'm going to zoom in here a little bit on this one. Okay, this is your March daily chart. Yes, we are in a very steep uptrend. Yes, we are probably overbought by daily standards. But here's the thing. This is our fourth consecutive 13. We've got a count here for another 3 to 4 days before we get another one. I think that potentially once we hit this fifth 13, that we're at that could trigger the end of this little move, and we could get a pullback. But the fundamentals are so powerful, and the dollar continues to break. I think that pullback might be even shallower than people are thinking, and is really just an opportunity to be bought. So from a re-ownership standpoint, we're waiting for that break. I really don't want to buy it at this level necessarily for a brand new position, but a break and a test back of this 460 area, then I think we're gonna buy it. Definitely a test back here at 440, we're gonna own it, because I think that's just a really solid risk reward. I think it's going to take a lot to get there. If we get all the way to 520 before we break, then that's fine. We'll take another stab. Again, I think between now and July, I think we've got higher prices coming, because honestly, what's going to make it go down? You got to have some sort of a supply increase, or you've got to have a demand decrease. Oil's breaking back up above 50. That's a big deal, because the bears have all been saying ethanol is the Achilles heel, right? Ethanol's terrible. COVID's going to kill it. Well, if oil's rallying and the dollar's crashing, why is ethanol in trouble? I don't get that argument either at this point. So I would just be very, very patient and let this thing unfold, and don't jump in and sell it too early. All right, that's enough of corn. We're clearly bulled up on corn, but I think we're bulled up for fundamental and technical reasons, not just because. It's honestly driving me crazy. Guys are selling just because the price is high. It's not high. It's not high in relation to what's going on in the world. Okay, soybeans. Remember what we said about soybeans. This is your weekly chart pulled back. So I know it's hard to see, but I just want you to see the price levels, right? Soybeans, a couple things on this chart. We've now reached the upper pinnacle of this move. I think that's extremely bullish. Remember, we took a while to break through this 950 level. Then we came up to this level here at 1050. We finally broke it. We consolidated and tested it for 6 or 8 weeks. We finally broke it. We moved straight to this 2016 high at 1208. And then we hesitated, right? We got a quick headache, and then wham, we just blew through it. We came immediately up here to the 1260 level, blew through it. We came straight to 1350. We've now blown through that. Guys, we really don't have any resistance on this chart until 1450. Maybe you can make an argument that there's some at $14. So 1425, 1450, that's our target for the end of this little move. Then I think we take a little break, and then I think we're going to come challenge this 2014, probably the 2013 highs right in here. I don't know that we're going to go all the way up to the 2012 high, but if demand stays strong like it is, and from a demand picture, it's more than just China needs soybeans. You've got oilseed problems all over the world. I don't have time to get into that, but this is being led by the products of soybeans. Oilseeds and meal both are extremely hot and strong, and that extends way beyond China. You're talking India. You're talking the whole planet needs the oil and the byproducts of soybeans. So the demand is just off the charts. You've got weather issues in Argentina, and remember, the USDA is showing us tight stocks at 175 million bushels at the end of this year, with great crops in South America. We haven't even started to take those down, and we definitely haven't gotten into weather issues for next year. So I don't buy the argument that this is going to get whacked and we're going to drop all the way back down to $9, or we're going to come back to business as usual. Again, I think that a lot has shifted and the market is just now starting to recognize it. Beans, commodities in general, they're still extremely undervalued relative to other assets around the globe. So we haven't started rationing demand yet. The funds haven't gotten to a long position that makes them overly excessive. Remember, they're managing a high multiple of dollars as that they were back in 2012. There's been so much monetary expansion. They've made so much money trading other gold and Bitcoin and other instruments. They've made so much money. They can put a much larger position on today than they ever have in the past. So I don't see why that's going to change. And I think we've got another couple weeks, and I think we're probably going to tap out at this 1450 level, take a little break, recharge, and then get into our acreage battle next spring. So I have no interest in selling 11 new crops 1156. I have no interest in selling that at this point. Look at your oscillators down here. Come all the way back to 18, come back to 2016, come back to 12. We're just now reaching the levels that they were at back then. We haven't exceeded them, and we just hit them. So we could have several more weeks of elevated levels here before we get any meaningful break at all. And it can break all the way back down to the 50 here on the RSI, and it's still bullish. So I don't see the reason to jump in and panic on these charts. All right, wheat, and I know I'm about out of time, but look at wheat as well. Lots have happened here. Wheat's the sleeper. It's got all the global supply. It doesn't have the tight issues that everyone's talking about. But guys, it's rallied $2 since August. It's up $1 since December 7th. It's got a story. Something is brewing in wheat that I don't think the market's even recognized yet. So, and just look at the weekly chart, right? Where's the support? Where's the resistance? Well, here's your 2018 high at $6. We knocked that out. Here we are. Here's this big reversal week right here at 594. Here's the low in 2012. We blew through that. Now we've blown through 607. Guys, wheat could easily trade up to 706. Arguably, you've got resistance down here at 650. So we're looking up in wheat, we're looking up in beans, and we're looking up in corn. And I'm not saying they're going to go straight there, but we've got to recognize that this is unfolding before our eyes, and we have a radical shift from where we were a year ago and even 9 months ago. We want to be really patient and let this thing play out, because the market will give us some type of signal before we sell it, and that's not here today. So with that, I'm going to wrap up. I know I'm bullish. I'm not trying to be overly exuberant. I'm not trying to be greedy. I'm just be objective, right? Look back at the chart and recognize that something's changed. This is now support. 598 is now support, and all the way back down to 530, you still got a bullish argument in wheat. So I would hold it and not take any major actions. So we're looking up, and I think hands off the steering wheel. Don't try to oversteer it or overtrade it at this point. Just let it happen and enjoy it, because I think we're going to have a really good year in 2021. All right, that is 20 minutes. As always, there is risk in this business, and if you're going to take positions, trade to the level that you can afford to trade. Always talk to somebody with a professional, and recognize that that I might be dead wrong. We might get whacked tomorrow. If that happens, we'll let you know, and we'll fall on that sword and be more than happy to own that if that's the case. So happy trading. Have a great week, first week of the year, and we'll talk to you next week.